All right, let's bring in Kevin Green, senior markets correspondent, to help set up the action today. KG, I know you were monitoring this over the weekend, so it kind of interrupts your weekend a little bit. I did expect to see, as you know, more pressure on futures to start today. But big picture now, how are the markets processing what has occurred over the weekend with the U.S. striking those nuclear facilities in Iran?
Yeah, we are seeing the markets really trying to kind of turn into the green here. If you're looking at the even the S&P 500, obviously the strike that took place over the weekend was kind of unprecedented here, and we did have some fear. But usually when we have these massive strikes or these unique strikes, they do happen over the weekend. It lets the market kind of digest and understand the situation, the events, and then we open up, and then you usually do see a pretty significant spike down in the markets, like we saw for the indexes, and then a spike for crude oil here. But when you're kind of looking at the dynamics, we have not seen a really big response or any response really from Iran as of right now, and we have not seen any type of disruptions when it comes to oil flows in the Strait of Hormuz. Now, there are some proactive measures that a lot of shipping companies are taking in order to avoid that route, or try to go around or do some other methods in order to try to protect themselves. But we have not seen any formal blockade at this point in time, and I think that's really what the market is kind of focusing on. And then also, what is going to be the response against the United States? If it's going to be something that we see military targets being hit overseas or what have you. And so we haven't had any of those developments here. It seems like the market's trying to digest this. Hopefully, we are able to see this issue come to a resolution and stays in its own little region at this point and does not expand out to other partners kind of joining this conflict. And if so, I think that's actually going to be a boon for the markets, and maybe also stabilizes the energy markets as well here. So a lot to digest over the weekend, but the market is trying to buy the dip once again, because they do believe that this is not going to escalate too much further from here.
Okay, so you had fighter jets from Lockheed Martin, Boeing. You also had Northrop Grumman B-2 bombers involved. Not big moves that we're seeing in those. What's your read through on how the market is perceiving this?
Once again, the market. Yeah, the market's just the market's really not pricing in the fact that the United States is going to be in a protracted conflict here or getting into this. It looks like it was a one-time strike. That's what the market's pricing in. We don't know that, obviously, but market's saying, hey, this was a one-time event. It doesn't seem like we're going to get into the war, very actively outside of maybe some support when it comes to intelligence, maybe some air support as far as trying to knock down ballistic missiles going into Israel. And if that's going to be the case, defense companies, you start seeing a little bit more of a bid when there is the perception of a protracted war, even boots being on the ground, which that seems like highly unlikely at this point here. So they are not catching a significant bid, and you are seeing, once again, energy markets kind of subdued at the moment. Now, just got to highlight, anything can change. I mean, this is actually a very, uncharted territory, and there could be additional developments, like, let's say, the Strait of Hormuz. If we do see that being blocked or being mined, then you probably will see those defense stocks actually rising a little bit more, as well as energy prices moving higher. But for right now, once again, the market's saying this is a one-off event. Hopefully cooler heads do prevail, and they're kind of looking forward to the next event that's on the calendar. We do have a lot of economic data this week too, as well, but I think the market is really discounting the fact that we're going to get in something that's going to be long-term, similar to what we saw with the war in Afghanistan or even the war in Iraq.
So let's then, I want to take a look at oil. Crude oil is higher this morning, but off the highs that we saw yesterday. Crude oil, what is above $74 a barrel right now, so not quite 1% higher. But, on Sunday, you saw it starting to approach. It looked like it could have gotten to $80 a barrel. I mean, it was close to 79. So when you think about how the market is pricing the risk of the Strait of Hormuz, because you have, according to state media, the parliament in Iran calling for a closure of the Strait of Hormuz, but I'm seeing reports and notes from different experts saying that would be highly unlikely or near impossible. Vice President J.D. Vance saying, it would be crippling economically. What's your read through on that?
Yeah, a couple of things. So the crude market right now, obviously, you're seeing a lot of selling into strength. Now, don't get me wrong, we are seeing elevated prices. You are seeing war premium being put into the contracts right now, but we're not seeing the ability for crude to actually sustain above, let's say, $77 a barrel, which is really where we faded pretty much every single time that we approached that level last week. We saw, some sellers actually stepping in. There's a couple of dynamics that are taking place here, Diane. The first one here is obviously crude oil prices have been very depressed. We did did see a significant amount of short positioning for managed money traders out there before this event really escalated, and you are seeing a short covering event there. You also have a situation where producers, those that actually do extract oil or refine oil, where their short positioning against oil was actually fairly low. And so when prices actually do spike, you actually have producers that need these as hedges actually selling into these contracts in order to lock in higher prices. That's going to also sustain margins as well as maybe even improve margins. So you do have a significant block of traders that are going to sell into any type of pops. I think that's also kind of taking place here. And you are not seeing any type of blockade within the Strait of Hormuz right now. There's a couple of different things there. Could we see mines being placed in the Strait of Hormuz? We could. And that does get a little bit dangerous. It doesn't appear from the open source intelligence officials that are out there right now that activity is actually taking place. So I think that's another reason why you're seeing this being sold into. And then two, the naval forces for Iran, even though they might be formidable and improved from 1988, they probably do not have a big match against a major coalition. We had this situation actually happening in 1988 where they did mine the Strait of Hormuz. And Diane, it only took us one day to actually disable the naval fleet for Iran. So, I mean, we have seen this type of tactics being taken place in the past. And we have seen the fact that they have not been able to hold or shut down the Strait of Hormuz. The market might be pricing that in. And then you are seeing some private companies actually rerouting their tankers. Now, that's going to be a lot more expensive and it's going to delay a supply and deliveries. But the market's being a little bit more proactive on the physical space. Insurance premiums are really already pricing in that a conflict or the risk of being hit in the Strait of Hormuz is already being priced in the contract. So there's a lot that's actually happening here. And you would have to have a very significant disruption of flows in order for prices to sustain itself. And it would hurt Iran as well, because that's a big revenue driver for them, that strait, for them to get their own oil out into the market. So a lot of different dynamics. Oh, last thing. The parliament voting on the Strait of Hormuz and shutting that down is only symbolic. They don't have the ability to actually shut that down. They have to wait until there's another Supreme National Security Council that actually can approve that request. So it's a little bit different from here in the United States than what we are seeing overseas. So symbolic in nature, but we have not seen any formal approval from the Supreme National Security Council of Iran.
Yes, that's okay. That makes sense. And so it seems like the market is pricing it right now, at least when it comes to this war of words at this point. KG 59.67 on the S&P 500, where we landed on Friday. What's your target to the upside and to the downside?
Yeah, to the upside, your big area of resistance is going to be 6,000, and then to the downside, I'm looking at 58.95. So pretty decent range here. I think once again, the news flow is being priced into a lot of these premiums and these option flows early this morning.
All right, thank you, KG. That's our Kevin Green, senior markets correspondent here on Schwab Network. Appreciate it.